Basil Valentine on today's News Talk, TNT.
And welcome back to the Basil Valentine Show today, Wednesday, the 11th of September. Bitcoin shows strength as on-chain data hints positive bias. Bitcoin price approaches the $56,022 support level. If it holds, the recovery could continue. Well, joining me to discuss this, other aspects of the crypto world and indeed the wider economy, is our very own independent researcher and TNT contributor, Blake Lovewell. Welcome to the program, Blake.
Hello. It's a pleasure to be with you, Basil, on your very own show. What an honor.
Yeah, well, thank you. It's my pleasure to welcome you. Now, Bitcoin today retraced slightly and is approaching the critical support level of $56,000. If it holds, according to this cryptocurrency expert website, it might pave the way for further recovery. However, Wednesday's upcoming US Consumer Price Index report could trigger volatility in the largest cryptocurrency market by capitalization. Moreover, on-chain data hints at a rally. What is on-chain data, Blake? And why is $56,000 so crucial? If you can answer both those questions,
I can. Yes, I can. On-chain data is any data that can be garnered from the public blockchain that makes up Bitcoin. Bitcoin, the blockchain is a consistently added to history of every transaction that's ever taken place on the Bitcoin network. It's also known as a ledger, a distributed ledger, as it's distributed amongst a large network. Each time a transaction occurs, that's lumped into a block with a bunch of other transactions, and then everybody locks that in, and that becomes part of the blockchain. So from 2009, we've got a continuous record of every transaction on the Bitcoin blockchain, and that is how you can prove transactions and ownership of certain Bitcoins or parts of Bitcoins without a middleman, because you can just say, check this part in the history, that's when I bought this piece of Bitcoin and I still own that Bitcoin, and therefore it's a trustless system. On-chain data refers to what can be garnered or harvested out of the blockchain. So there's various companies, numero uno being chain analysis. A name you really need to know about is kind of a new intelligence agency, but it started as a private company, but they use large data centers to grind through the fine amounts of data in the Bitcoin network to pick out trends, track who owns what, and so on. So Bitcoin's becoming a lot less anonymous. The on-chain data that they seem to be referring to is more like price action. So they're just seeing how many transactions are taking place, how many people are buying, whether those wallets have previously bought or will hold large amounts. So it seems from their opinion that more people are buying and holding on to Bitcoin rather than selling off and worrying about Bitcoin indicating a positive trend. I mean, if you go into the crypto sphere, you end up seeing loads of this kind of crystal ball gazing, number go up philosophy. And, there tends to be this kind of general obsession with the price of Bitcoin and all other cryptocurrencies kind of following in pursuit, going up and making a profit and being a speculative investment. Really, I think that does down the true purpose of cryptocurrencies, which is to be a currency, not just a store of value or a speculative investment. But I think that it's kind of now since 2020, at least, when everybody was shut in their homes and used some of their stimulus money in America to speculate on not only the stock market but also cryptocurrency. It's now become this sort of a speculative sphere, and the most people have exposure to it is that weirdo at work or at the garage who has a neck beard and somehow has enough money to buy a really nice car despite having never left their basement. So it's kind of got a bit of a bad rep for itself, but in the background, bigger wheels are turning, and there's this huge amount of mainstream adoption. But I think that really Bitcoin as a threat to the banking sphere has sort of passed. It's been hobbled by various technicalities I won't go into, but it's very expensive to do transactions. They take about 10 minutes to finalize, so you can't really use it to buy a coffee or even a large thing at a till or a checkout, because you're going to be stood there for 10 minutes looking like a chump before the transaction verifies.
Right.
Yes,
Yeah,
and then
it's difficult to buy things with, and it's also very difficult to sell it. So, I can't see what the attraction is.
Well, if you don't want any, I won't give you any. I mean, I'd rather hodl onto it. Hodl being the anachronistic term for hold onto it for the long term, because as it gets this institutional backing, it's now at the state level. It will become one of the base layers. The M0s, the kind of golds or the hard assets at the bottom of the currency pyramid. I mean. The powers that be have been talking since about the 1930s about having an energy currency. That's kind of what the trend of a lot of the climate control carbon credit sphere is about. It's about how much energy you're using and then turning that into carbon, obviously. So carbon's the big problem, but really it's about controlling energy, who has the, hand on the faucet of energy, and then controlling how much individual people have, because in their eyes, energy is utility and usefulness. So Bitcoin is kind of a perfect energy currency because it literally just is mined by using electric energy in a very standardized form, and so the value of Bitcoin is pretty much the price it costs to mine it in a kind of worldwide electrical terms. Way. So Bitcoin can very easily fit into not just the rebellious anarchist cypherpunk, anti-state. It could also very readily be absorbed into a kind of global energy currency system, which is much more aligned with the kind of Schwabian World Economic Forum type of sphere. You did mention consumer price indexes or indices.
Yeah, it's gone down to 2.5%, and markets are interpreting that as not as good as they hoped. Gold prices fell, treasury yields firmed up.
All I'd say on that is kind of in the short term, these indicators going up and down, what Jerome Powell at the Fed is saying causes the stock market to ripple up or down, and everyone's gambling on these 0.25%. I think that it's very myopic.
Well, some people were hoping, I think, for a bigger rate cut than that, and now those hopes have kind of been dashed. It's endlessly this game of to and fro with expectations, isn't it? Only a couple of weeks ago, everyone was thrilled about the idea of a 0.25% cut. Then suddenly they were hoping for more, so they're disappointed when they don't get more.
Well, my opinion is that the whole thing's very myopic, and that people have been fed a very nutrient low diet of Soylent Green in economics terms for a long time, at least since the 1970s, when the currencies began being very debased. Even before that they were being debased, but when you're off the gold standard and you're onto fiat, you're on the bad stuff. So all of these kind of mirages about rate cuts, and it'll affect you if you've got huge mortgages, or it might affect you if you've got a large business in some way. But I mean, you can play the upside and the downside. You can do shorts as well as longs on the upside. So everybody's gambling left, right, and center on these tiny movements. But really, what do they mean in the grand arc of history? I think very little. And if we're looking at those grander arcs, I think we're looking at the trend towards de-dollarization. Not that we are at that point yet, but we've got the BRICS summit coming up next month, and I'm going to be writing an article about the BRICS new form of currency. I'm going to call it Brick Coin, but it's not called that, but it's kind of a basket of currencies that they're working on. It includes energy in the mix in terms of oil. It also includes an aspect of gold backing into a currency, but it also will take the model of the IMF's special drawing rights, where it's a basket of currencies that you then use that as a currency. So China buying something from Russia, Russia buying something from India, India buying Brazilian goods. They can all intermediate with a BRICS-based system and avoid the US dollar, avoid SWIFT, avoid any of the onerous draconian tariffs that have been placed on them just by not playing ball with America. So if that comes along, then we're looking at this pivot away from the US hegemony in economic terms. And that's why I think we're at a really important time, and why I kind of feel a bit sad that Bitcoin's become this number go up thing. And for the last couple of years, it's just actually stayed in that channel around $60,000 per Bitcoin. But we've also had ETFs. So in the same way that gold was innovated upon with ETFs, exchange traded funds, then you can gamble on the stock market for gold. And now we're at the stage where, there's thousands and thousands of grams of paper gold, certificates worth as much as the paper in this notepad, but the per gram of real gold. And so the prices are incredibly distorted. So I also don't hold much stock for the day-to-day price fluctuations of gold, even though that is trending up and central banks are buying gold in record amounts. And I would recommend, if you have spare money that's melting like an ice cube in your bank account, as Michael Saylor says, to allocate something to something, maybe gold, silver, crypto, or anything that won't melt as quickly as hyperinflating currency, because we've had that shock a couple of weeks ago in the stock market, and that seems to be one of the early tremors for a larger scale correction. Not that I have the crystal ball that I so maligned earlier to predict that.
I know a fellow who uses astrology to work out when during the day gold prices are going to hit their peak. Yes, astrology, you heard me right. He's a very clever chap. He's written a 600-page book about how to do it. It's almost what it is, completely impenetrable, unless you're very advanced in these subjects. But $56,000, Blake, why is that a magic figure for Bitcoin?
Well, I'd say actually the real magic figure is 60,000. Right now it's actually sat at 57,000, so it's already smashed through their mythical 56,000. But 60,000 is kind of this idea. It's like a band of resistance, if you're talking in speculation terms, where when the price hits 60,000, people sell off. Usually, but if it can break through that, then it's a kind of there's no limit to how high it could go.
It could strengthen more from there, right? We've got to go. We're out of time, Blake, but come back and join me again very soon, because there's lots more. I really look forward to talk about. Great. I look forward to it too. Headlines now. Two more great guests, including Joe Hoff, to dissect the debates last night. We'll be back after the headlines.